Welcome back. Crude prices have fallen almost 30% from their October highs, clocking operational gains for oil marketing companies. How much better can the rest of FY19 look like? We are asking Mr. M.K. Surana, Chairman and Managing Director of HPCL, who has just joined us. Mr. Surana, good morning. Does this mean a seminal jump in GRMs for you all? This big fall in crude prices, or is it getting translated into lower product prices as well?
No, it is definitely translating into lower product prices, which you can see from 4th October onwards. The petrol and diesel prices has been on the downward trend. Somewhere in October, it was somewhere around 80, 85, yes. 84, I think, and then it fell down to now whatever it is there, 70 or something like that. Now, as far as whether this immediately helps in getting the GRM up, that is also a function of cracks. The cracks had been on lower side, especially on gasoline. That has been a very weak cracks. Diesel has been good. So the GRM will be a function of both of this.
Okay.
The positive factor for GRM will be lower fuel prices and better working capital. That will be the positive sign. Inventory loss may be a negative sign.
But you have a substantial working capital improvement, I would assume, because wholesale rates have fallen rather sharply. So can you broadly give us some guidance about GRMs in the third quarter? We are almost through with the third quarter.
Yeah, but because we are nearing the completion, so I would not like to make any specific statement on that right now, because it need to get through the board.
Okay.
But
no, not even directionally.
To you, the drop in the crude, I would probably like to hold myself on that right now.
Okay, you were finishing your sentence, sir. Going by the drop in crude?
No. No, what I was trying to say was that there was a sharp fall in the crude prices, but there had also been an up and down in between the period. So it will be a sum total of that.
Okay. Mr. Surana, good morning. I wanted your thoughts on some news reports which indicate that the government may shift part of its subsidy burden, including 20,000 crores on the fuel subsidy, from current fiscal to the next year in order to manage the fiscal deficit. Have you heard anything on that front? And, you know, what would the, what would the impact be on oil marketing companies?
No, as far as currently the subsidy is there only on the PDS kerosene and the subsidized LPG cylinders, and we had been getting the reimbursement from the government on both of these accounts. So oil marketing companies does not absorb any subsidy on kerosene and LPG. If there may be, even if suppose that is true that there is a rollover, it only is the impact of a delayed reimbursement of that, but it is not a loss to oil marketing companies to that effect.
No, we take that point.
We are fully being reimbursed on LPG.
Yeah, you will be reimbursed, but if you're reimbursed late, you have to bear the working capital cost, which is why we wanted to ask you, had you heard that the payments could be delayed?
No, not as of today. There is no specific indications on that.
Okay, sir. I wanted to ask you about demand. This is a surprising number we got, that demand for fuel products in November fell by 1.7%. In all the previous months, most of the previous months, we saw them rising, a flatness in September, but otherwise it's been rising between 4 and 8%. Is this fall disturbing? Is it a trend?
There is also a phenomena that normally if you see historically during the month of Diwali, immediately after the Diwali, the truckers' activity comes down a little bit, and there is a fall in the demand. Now, if you see the last year, the Diwali was in October, and this year it was in November. So when you are seeing month and month, the last November will be a higher demand, and this November will be lower demand. So I won't say that it is a straight indication of any fall in demand or something like that, particularly when the prices are lower. So let's see the trend further.
Okay. You know, a lot of brokerages have been a bit concerned about the government's decision to ask the oil marketing companies to absorb 1 rupees per litre on petrol and diesel. And a lot of analysts believe that Q3 and Q4 onwards, that impact would be felt on financials. What's your own view there?
Fortunately, the crude prices came down and the pressure on the margins have subsided substantially on that. So I think that we should consider as a past history now.
Okay, but it's absorbed, sir, more or less?
See, the question is that I have mentioned earlier also, it was a specific intervention from the government, but the prices had been varied on day-to-day basis in line with the international prices. And when the prices are lower, the pressure on the margin reduces and our capacity to pass on the full impact to the market improves to that extent.
Okay. Well, Mr. Surana, we have to take a break. Can you please stay on with us for just a minute more? We are back in a jiffy.